You're looking at the price of $135 as being very key for Apple going forward. Why do you say that? And with people going back to school and going back to work, isn't that potentially the start of a super cycle for this company?
So there's two things you're talking about there. One is the fundamental picture and the other is the technical picture. The technical picture is just pretty easy to see that if it breaks above 135, then you have, since January, a series of higher highs and higher lows. But you need to get over that 135 hurdle that was the high from April. What is more important to me is the fundamentals here. And, you know, again, I used the term best of both worlds in Citigroup. This is also the best of both worlds in that since the beginning of the year, the forward multiple has come down by 20%, while earnings estimates have gone up by 20% for, in part, the reasons you're talking about, that maybe we're going into a super cycle here. I happen to agree with the call, but the bigger picture being its shares have gotten cheaper while the fundamental business has gotten better. That's the best of both worlds. Give me that all day long.
So, Weiss, what's your take on this?
So I do own Apple. I was talking to an exec, very senior exec at one of the big three telco companies, and they just don't see the iPhone growth continuing because it's got to be driven at this point by new features. And what they've done for the new features recently is just improve the camera. That's always the thing. We're improving the camera, we'll improve the speed. But for 5G, you know, the consumer application's relatively muted right now. So I look at the supply chain that goes into Apple, and I think Katie's call, and she takes a price target up and down, I think Katie's call is having a much larger impact on stocks that I favor. Qualcomm, Skyworks. I mean, look at those today. And to me, that's where the alpha, where the performance is going to be generated. Even in Jim's Qualcomm, which is lagging the two I mentioned, two I own naturally, but I think that's where you want to be rather than Apple. Stay in Apple. It's not going anywhere.
Did you buy back Qualcomm yet? Have you bought back Qualcomm yet, Steve? Can you just get it over
I've
with?
Actually
I mean, we all know you're going to.
Jim, I put you in Qualcomm. Now try to put you in Corvo and Skyworks. Come on, get on board. Make some money. Don't be afraid to out-earn.
Josh Brown, you're putting your hand over your face. It looks like you have something to say.
Oh, no, I agree with most of what I heard. When Farmer Jim starts talking technicals, I get those goosebumps, and I'm pretty happy to hear it. I would just say that historically, Apple has been a stock where you've been way better off not overthinking it. The kind of people who are doing, like, channel checks on Taiwanese suppliers don't make any money at all, I promise you. I know these people in real life. The thing to keep focused on with Apple, and Jim made this point earlier, your share of the earnings grow as the company shrinks their float. I think they're going to have the fourth highest buyback in the S&P 500 this year. That should continue to grow over the years. They're generating more cash than they know what to do with. And then to Weiss's point, they are continuing to spend on things like R&D. So you can really have your cake and eat it too. Dividend, buyback. Companies should generate over $110 billion in free cash flow this year. Think about the size and scale of that, how ridiculous that is. Earnings are expected to grow for the full year by over 50%, and it's the biggest company in the world. It's a $2.2 trillion market cap. So this is a miraculous company, unbelievable stock. Yes, it underperforms sometimes. Why wouldn't it? So does every other stock on earth. Don't overthink it. I think this could be $150 with no sweat whatsoever.